All right. All right. I think it's working. Let's send the link into. All right. Just give me a minute. We're about to start. I'm gonna send the link. All right. Let's go ahead and open up Trading Views. I'm just gonna wait on some confirmation that you can see me right. We're about to start. All right. I have a lot of notification over there. Yo. Okay. All right. So I hope you are doing fine, guys. I'm just gonna lower down my music, put something else, and we're gonna begin in like 1 minute. So I guess that if you are in the recorded version, you maybe want to just move forward for like a minute. If you're live, give me a minute. We're about to start. I'm just looking for one song. All right, guys. Perfect. So now we are beginning. We're gonna go ahead with AUD USD chart, and then we're gonna go ahead and go take a look at USD CAD also. AUD USD right there. So I hope that you guys are doing fine. I hope you had a nice weekend. I did had a nice weekend. I was working at the club that I'm about to leave, guys, because I really want to focus with you guys. I begin to have a lot of students. My students started to make a lot of money, so I want to take care of them, move forward with them. And because, like I said, trading is all about confidence, and I really want to be there for them. I'm at the very clear. All right. So, how do you trade the market? First of all, what application I'm using to trade the market? I'm using TradingView. It's a website called tradingview.com. It let you actually do every chart you want to do, and you can draw. You have all kind of drawing tools and stuff. You can even post like publish idea. So this is pretty cool because this is actually where I publish all my idea. Like you can see, I have 30,000 views. All my chart, all my calls that I do in the Phoenix channel, I actually post my chart over there. So as you can see, there's a lot. I posted 150 ideas. So this is the program I'm using to actually do all my charts. So then, first of all, you have to know what kind of trader you are. Are you a long-term trader, short-term trader, medium-term trader? Well, it's all going to depend on the what can you handle? Like, are you able to handle a trade for weeks, or you're more the kind of people, the person that get emotional when the trade is there for more than 2 days? You know what I mean? Sometimes you're gonna have to handle like a few days of negative, and this is why, guys, like in my private class, this is what I'm teaching my student how to handle this, because this is not something I can teach you over a free webinar because it's a longer process. You know what I mean? And I want to show you how to do your chart, how to do your entries, how to do your exit. So if you have any question, I cannot see the question on the YouTube channel. So post it to me on the Telegram in a private message. I will be answering there. And at any time, like, don't hesitate. I'm ready to take a small break somewhere because I know I'm talking pretty fast. I don't know if the screen is okay, if it's blurry. If there's something, just inbox me. I will actually take time to answer every comment, every message that I get, right? So I'm going to be looking at AUD USD because the last week we've been making a lot of money on that call, even if some people got impatient and closed their trade in a negative. I did not do that. I actually doubled my friend account with actually this pair, and this week I'm expecting to make a lot of money on this pair also again. So The way I do start with my chart are always going to be in the monthly chart. Why? Because I want to know where the market is going long term first. Because remember something, guys, when you look on the higher time frame, it's less risky. What I mean in there is that, for example, that you just go on the 1 hour chart or 4 hour chart, you know short term where the market is going, right? But you don't know where the long term is going, and the short term is going where the long term is going also, right? So me, why I'm more like a swing trader is that with a swing trade, you can actually get the entry king for more than 30, 50 pips. You can get the entry king with for like 100 of pips, like on AUD USD. I mean, I'm aiming about doing like 500 pips on this pair right there because I still have some entries open around there, you know, around that level. And I'm gonna explain you how to actually get that perfect entry and why most of the time I'm pretty much using buy limit, sell limit, and I'm not using direct entry. I don't know if you've seen last week, I did a couple of direct entry, right? But the difference between a direct entry and a sell limit and buy limit is not that you have more chance to be wrong. Is that if you do a direct action, you have more chance to hold negative. So this is why I'm telling you, me, sometimes I do some direct action because I don't care about holding negative, because I really trust my trade, and when I get into a trade, I'm gonna hold it till I say, all right, like it's really not going in the way it's supposed to be. Like it broke a trend line, it broke something, you know what I mean, that it wasn't supposed to break. Like last week, like people were freaking out because they got a news there. Look, I'm just gonna do a small circle around there. There. This move is actually a news, and I told my student, be ready for a pullback before it keep dropping, because before the news the market was there, and I said it's gonna go up. But instead of buying, I told my student to put like some sell limit all around there, so we got some more entry king, and then the market the next morning drop a lot. Well, so this is everything I'm going to be explaining, talking about in the webinar that's actually just began, because I want you to understand why you shouldn't get in some trade and why you should get in some trade, and how to like know if your analyses are right or if they're wrong, right? So let's first move on to the monthly chart, because this is the way you know that where the market is going, like I just said before, right? So first of all, you want to draw like a trend line, right? How should you draw your trend line? It's actually, you must draw a trend line that makes sense. What I mean in that is that, for example, look at this. Here, it touched one point, right? It's like a support and resistance, but in diagonal. So what I mean is that the more point the trend line will actually touch, the stronger the resistance is going to be, right? So as you can see, it touched one point over there, another one, and another one around there. Plus, it's gonna go ahead and touch another point over there. Now I'm just gonna do something because I don't like sometimes I use like right extension, but sometimes I prefer to go really straight like this, right? So now I know that the market, like, if I go really simple, just over the monthly chart. In the previous webinar, I think I talked about like the retest. Like the market, every time the market's gonna break a trend line like it did over there, look, the market went straight down, right? Like this. But before it keep going down, the market will always go and retest the level. Always. So instead of selling over there, I'm gonna wait till the market go ahead and retest the level. You know what I mean? Because I want to get a better entry, because I could sell over there, but I know I'm gonna need to handle some pullback on the when it's gonna go back up, and you don't know how low it is gonna go before like retesting the level, right? So this is pretty much it over there. Like, then what I like to do, I like to put one resistance and one support. So I'm gonna put one resistance over there, right? Because, and now you're gonna ask me, why did I put the resistance over there? It's because since 94, the resistance is good. What I mean in there is that, look, it touched one point, second one, third one, the fourth one, fifth one. Then look, the market from there went through it and just rocked back up. Know what I mean? So it's a pretty strong level. And where am I going to put the lower one? I'm going to put it over there. Because I want the market, like, it could be lower, right? But due to the fact that the market is above the support, I want to make sure that the market is going to hit my take profit. That's going to be 71,400, I guess. But then, if you want to be even more accurate, you can add a zone. What I mean is that, like, a lot of people is going to call it supply and demand. I'm going to be talking about that a little bit later. So now, simple, eh? We have our trend line, we have one resistance and one support on the monthly chart. So now I'm going to be moving on to the weekly chart, right? So I want to draw another trend line, you know, because I want to understand where the market is going, like I said. So I'm going to do one like this. And the reason why I did it this way, look, it touched one point over there. Then look, when it touched this point, it bounced back. So there's something there. There's a resistance or something that made that actually made it go crash, actually. You know what I mean? So if we can look at what happened, you know, the market crashed. It broke the monthly resistance. I'm going to put the monthly one blue, all right? It broke the monthly resistance. Go ahead, retest. And it did go up and retest this one also. So this is another confirmation that the market is actually going down, isn't it? Plus, I don't know if you guys know about like price action, but this is a really, really good indicator of where the market is going. What I mean is that there's going to be head and shoulder, double top and double bottom. There are some people that are also going to use like the harmonic pattern, for example, triple top or triple bottom. So I'm just going to go really, really, really quickly to add another confirmation that the market is going down on AUD USD. Here I have a first stop right there. And I'm going to have another confirmation over there. But remember something, guys. To have a valid double top, the second top has to be lower than the first one. So here, as you can see, my second top is lower than the first one, right? So it means that the pattern is valid. So it means that when a double tops happen, the market normally crash down. So I'm expecting the market to go back there. Whoop, sorry, I wanted to use the arrow. So I'm expecting the market to go right over there, right? Because I see a beautiful double top forming. When we're gonna go on the lower time frame, I'm gonna tell you where I would put my sell limit on that. And trust me, if you put it where I put, it's probably gonna be some free candles, some free candies. Sorry. So because exactly. So sorry. This is pretty much it. The market's gonna go around 71. Now, I want to know. Now I know that the market is going down, but now the thing is that where will be the perfect entry to not get a lot of pullback, you know, because like pullback is something that we don't necessarily like, you know, because like when we're in the red, we cannot enter some other trade, you know. So before going to a lower time frame, what I always try to do, a channel, you know, to know where the market is going. You know what I mean? And here I can see like a kind of channel over there. I will put it like this, yellow. Otherwise, like this. I could probably put it like that, you know, like the market did extend over there. But anyway, I guess I could also put it like that, you know what I mean? But I won't be putting the lower one for you. Cool. So this is pretty much it. Now we want to know where the market is going. So now I'm going on to the daily chart. Sorry, I'm just looking if I have any question real quick. No, I don't have any question yet. Perfect. If there's something like I just told you, if the screen is blurry or something, just inbox me. If you want me to do something again, just inbox me. I'm gonna take the time to answer you guys because I'm there for you. You know. Right. So now I'm on the daily chart. Right. So I wanna I want to get an entry king. I want to know where the market is going. I want to know when to enter my trade. So now I have the master trend line around there because I'm expecting the market to stuck at those levels. No, because look, if we take a quick look at those two levels, they are pretty strong, right? Because every time that they did bounce on this level, the market, look, is going back up, right? So now we have our double top, we have our trend line. Now we should be waiting for a breakout. The way I'm always doing, the camera went off. Can you still see me, guys, or is there something? I'm just gonna text Steven. I'm gonna ask him if everything's all right. If everything's all right, I'm gonna keep going. Can see the chart on YouTube. What happened? Video gone. Sunset spectacular. Audio still there. All right, guys, just give me a minute. I'm just gonna try to fix it up. No picture. Share screen. All right. Telegram, AUD USD, démarrer le partage écran, screen sharing. All right, just tell me if it's back, right? I'm gonna be waiting on an answer on that. There we go. It's all right? All right, guys. Cool. Cool. Perfect. So you're back. All right, perfect. So now we keep going. Like, because have you seen what I did there? I did my trend line on the daily chart. Cool. But then why am I using the 1 hour chart, the 1 hour candle? It's just because I want to like make some more precision, to be more accurate, to know that when it's going to break this exact level, the market's going to crash and go back down. So this is the only reason why I'm using it. So this is pretty much it. So I'm going to do my trend line like this. So when the market's going to break that level over there, you know, like you can see that like the market went, touched this level, went back up, boom, extend. But it didn't really break the level. I'm going to explain you why. Every candle touched the market. This is what we call fake out. The market's always going to try to hit your stop loss. Is always trying to make you lose money, right? So when it's going down like this, people probably thought that the market was actually breaking out the trend line, right? And then boom, it just bounced back up. So this is why now you can see that the market did a fake out. So sometimes I even like to go on the 30-minute chart, just like to take a quick look. And even on the 30-minute chart, no, nothing broke the trend line. So everything's fine till there. And as you can see, now where the market is now, the market didn't really break. You know what I mean? Like it didn't even reach it, because so I'm expecting the market to bounce off that trend line and retrace a little bit up. And then I'm expecting the market to break it, right? Now let's move on to the forward chart. The next thing I'm going to be talking about, because now we know where our strong level, right? We know where's the monthly level, monthly trend line, weekly trend line, lower time frame trend line, the breakout we're going to be chasing at. Because look, now what I'm expecting the market to do, the market's going to do that, going to bounce back up somewhere around there. Then I'm expecting the market to break, go like I said, probably there, retest the level, and the market will actually go down. So this is what I'm expecting the market to do. So like it's cool, because like with the kind of entry that we're going to be looking at, we're going to be able to try to get a few good nice entry on that. I mean, what I mean by good entry is, if for example you are able to get an entry higher, you can keep it, because even if it will bounce up, you won't be so much in negative. You know what I mean? So now let's talk about the supply and demand zone, the way it works, the way me personally, I do it. Like there are some people that's not going to do it the way I'm doing it, and that's fine. You know what I mean? Because we all have different way to do it. There are some people that watch it like some that bought some class, I guess, and that was telling to do it this way and some other certain other way. And me, I just did it by myself. I just did some conclusion, like some logical conclusion, right? And the way I'm doing it, I'm always like, you take the square tool. This is the pass, right? And I'm gonna explain to you after why I'm doing it this way, right? So I'm doing this like this because like this. I'm gonna explain you why I'm doing my supply and demand zone like this. It's because look, when the market go through this zone, it is a reversal zone. You know what I mean? So look there, the market went in there. I'm gonna put it a little bit higher, like this. Look, every time that the market goes in there, it crashed back. Look, for example, that I remove my resistance. I'm pretty zoomed in now. Look, the market goes in there, whoop, retrace a bit. Whoop, it goes in there, but it's struggling to get out of it, right? So boom, then it crashed back down. Whoop, goes back through it, boom, crash. Goes back through it, the final huge crash finally happened. So what did happen there? Look, right there, look. Went through it, crash. The news happened, boom, crashed. And never went back into it. So this is what we call a supply and demand zone. Sorry. This is actually a zone where the market will struggle. It's like a resistance or a support, but as a zone. Because it's even more accurate. Because a lot of the time, the market's going to try to fake you out. You know what I mean? So it's always going to try to show you that, like, for example, I don't know what example there. You know, you said the market goes through it. So you think that the market broke it. But with a supply and demand zone, you're actually going to be able to understand that finally the market didn't really break it. Because look, sorry, I'm just going to extend the zone like this. If you take a quick look at it, there, this is the way I'm doing it. I'm going to explain you why I'm doing it this way. Because here it's actually the lowest point the market went before we're reversing and going back up. So I know that if the market break this zone, it's going to go back down. Look, for example, there. Whoop, try to break it, went down, went back in it, and boom, totally crashed. Then try to come back in there. No, it's hard, so it's crashing back. But when the market break it, the market keep going the way it is going. For example, over there, look, the market broke it, right? It went back to retest it because, like I said, when the market breaks something, the market is always going to try to retest the level or the zone or whatever it break before keep going. So broke it. So right there, you wait because you know that the market's going to go ahead and retest the level probably. So when it went back there, I would probably have wait to see if it break it. And when I see the market goes there, I would have bought. Why? Because now I have a price action forming. Plus, I would have put a trend line. Look, I would have put a trend line like this, like that. Touch a point there. When I see that it touched actually the second point. Now I am able to form that trend line because I have 1 point over there and 1 point over there. So to get an entry king, I'm going to be looking for a buyer over there with a stop loss just a little bit under that. Look, I'm going to put some tool. So I will be buying over there because I'm like, I know that it should bounce back and go back up. But for example, it goes back down. I mean, my stop loss will probably be there. Because remember something, a double top, if the second top is higher than the first one, it's invalid. So for the double bottom, for example, that the second bottom is lower than the first one, it's not valid. So this is why my stop loss is going to be under the first bottom. So like this, I know that if the second bottom is lower, it's probably going to keep going down. You know what I mean? So this is why you just put your your stop loss under the first wick like this. So for example, on this trade, I had a chance of losing 36 pips, but if I take a look at the chart and I would have this trend line above, I would keep my buy probably till around the zone over there. I would have made 700 bucks, 700 pips, sorry. So this is pretty much it. Or some people would have said, yeah, but Pierre, where would you have closed your trade? To be honest, I would have been closing my trade if I would have seen this trend line over there broken. So I'm gonna put it, for example, white. If this trend line get break, I would have sell. I would have closed my buy. So for example, look, here it would have break. So I would have taken profit over here, right? So I would have made a quick 100 pips. It's good because I could have lost 30 pips, but I could have made a quick 100 pips, 115 pips. So this is the way I do my trade. You know what I mean? So this is pretty simple. So this is why now I'm using more supply and demand zone than I actually used to because it let me being more accurate. So the way I'm gonna set my buy limit and my sell limit, sorry, it's gonna be, for example, I'm gonna have one at 77,500, and look, so I'm gonna have one sell limit right at the beginning of the zone. I'm gonna write sell limit. I'm gonna have another one midway, so 77,960, and I'm gonna have another one at the top of it, because I know that when it's gonna get there, it's at least gonna retrace. You know what I mean? So I won't be losing money. Then if I see it goes back down, I know that I'm gonna be making huge profit, because now, so this is why, guys, I'm always telling people, don't go like with your first entry like hard, because it might not be an entry key. It might be, but it might not be. You know what I mean? So this is why I always split my my lot size. For example, I want to put a lot size of 1.0. I'm gonna do probably three entry of 0.35. This is the one I'm gonna do it, because I want to be sure that I'm gonna be good enough to be handling this negative. For example, the way I'm gonna do it, the way I'm gonna place my lot size is that I'm saying, all right, if my first sell limit over there goes through the third one, how in negative am I gonna be? All right, 81 pips. 81 pips. How much money is it going to be if I'm 81 pips in negative? For example, I have an account of $1,000 and I play with a lot of 0.1. I'm like, all right, I'm gonna be $81 in negative. $81, it's less than 10%, so it's pretty safe. So I'm gonna be putting a lot of 0.1 over there. Then I have my second sell limit, half of it. So I know that like I have a difference of 40 pips between those two. So I'm gonna need to handle 40 pips negative plus 80 pips negative. So it's gonna be 120 total. So it's gonna be 12% of my old balance. So I'm like, it's okay. Like I cannot put more than that, because more than that, it's gonna be risky. I'm gonna be losing too much. You know what I mean? So I know that my third entry shouldn't hit a huge negative. So my stop loss would actually be something probably 30, 50 pips higher than that. So my stop loss will probably be there. Stop loss. I'm gonna put it right. I'm always gonna put my stop loss above the zone. You know what I mean? So total, I might handle like 100 pips negative. So this is the way I'm setting up my trade. But technically, it shouldn't, because why I did set those three sell limit is I'm like, all right, there might be a news that's gonna make the pair spike up and then crash down. Because remember something, news are really fake. What I mean in that is that the news are there to give you better entry. For example, that the news is bullish, right, for AUD, like last week. I'm not going to be chasing a buy. I'm going to be chasing some sell opportunities, because my graphic is telling me it's going down longer term. So this is why I'm saying you should always, like, even with a small account, because sometimes people keep saying, yeah, but Pierre, I have a small account, I cannot handle these long-term trades. Yes, you can. You just have to get these entry king. It's easier when you have a small account to play swing trade than to play a short-term trade. Why? It's because you're gonna bet less, but you're gonna catch more pips. So your account will easily double up. You know what I mean? And you don't take more risk. You take less risk because you're gonna bet less for more pips. And if you're able to get these entry king, like for example, that you put the sell limit that I said at 77,500. Like it never went back to this level. So even if you have like my friend account, it was at 20 bucks. I make most of my money with this trade. I placed a bet there. Then it directly crashed, but I kept the trade. Look there, it spiked back up, but I was not even in negative. I was still in profit over there. You know what I mean? So then it crashed back lower, and it crashed back lower. So now we can see that the market keep crashing hours lower and lower, meaning that it's about to go down. It's about to break the resistance. I'm expecting the resistance to be break maybe by Tuesday, maybe not tomorrow. If it break by tomorrow, it means that it will go really low. So I hope that it's helping you out, guys, how to get entries and exits. Like I said in a previous webinar, look, I've been talking a lot about triangle. What I mean in triangle is that we can do a triangle like this. So what does it mean? Is that if it break above, the market's going to go up. If it break under, the market's going to go down. So I know that my entry that's actually over there, if I see the market breaking up here, I will close it. But I won't be in negative. I will still be in profit. Okay, of a few pips, maybe 10 pips, 20 pips. But it's still profit. I still end up in profit. But the thing is that if the market break down, I mean, I'm going to make around like 300 pips. And if I wait, I can even make more than that. Because like I said, the market's probably going to go down like this. For example, it break over there. It will go retest over there. Look, for example, it go over there and it retests the level. I'm still in profit because my entry is there. If the market breaks up, boom, I close over there. I'm still 50 pips in profit. If the market break down, boom, now I'm in huge profit. Then the market's going to retrace. If the market break up, I'm going to close my trade, right? Then if the market break down, boom, it's going to go back down. So I'm going to be making total probably 600 pips total. Yeah, you can cash in before. Like me, I had like 12 entries on this. I have like 2 entries left. Because why? Because I want to make money. So this is why when you're a swing trader, it's nice because you can sell long-term and buy short-term. What I mean in here? Here I have a sell, right? But I'm expecting the market there to go back up. So I will wait for the market to reach that trend line. Then I'm going to be buying till like for maybe 50 pips. Then I'm going to close my buy because I'm going to do a trend line like this. All right? I'm going to do a trend line like this. Now you're saying, yeah, but why do you do it like this? Now I'm going to go in 1 hour chart. Why I'm doing this way? I don't want to do it this way because look, the market here didn't reach it. So I'm going to do my trend line like this because I know like now I have 3 points. And I'm even able to do a trend line under like this. Look, the market directly opened on a lower trend line and boom, went back up. So what I'm going to be chasing now, I'm going to be chasing for a rebound on the upper trend line like this. And then I'm going to be looking for a breakout here. If it doesn't break out, it might go there and then it will break back down. You know what I mean? And it would make sense. You know what I mean? So the way I'm going to work on this, I'm going to have a sell limit around this level. I'm going to write sell limit. I'm going to put it green. I'm going to put this also green right there. I'm just going to remove the arrow. Whoop. like this. I'm gonna remove the arrow, sell limit. Now I want to find out like my zone on the lower, like where's my resistance on the lower time frame to be sure that it is going to it. You know what I mean? Like here I can see a pretty huge level. Look, I'm gonna put it like that. So here I can see a resistance, right? Zone. Why? Look, when it touch it, drop, touch it, drop. Every time it did touch it, it dropped. You know what I mean? Even I could extend it a bit. Like this. Right? I'm gonna be cool with the zone. So I'm gonna have my first sell limit. Now I can see where I will put my sell limit. Do you know? Do you actually understand? So my sell limit, I will move it there, like this. A bit higher. A little bit higher. Like this. So this is where my sell limit is going to be. 76,700. Why? Because I want to be sure that my sell limit hit. I want to be sure of it. I'm going to put a second one. Half of my zone. And I want to put a third one on top of my zone. Like this, because I want to be sure. Half of my zone will be a little bit higher. Yeah, 700, like that. All right. So now I know that around this level, the market should reverse. You know what I mean? Because why? Look, small pattern, easy pattern. Whoop. The market did a double bottom, right? There. But the market did a lower bottom, meaning that the double bottom isn't even valid. So I know that the market won't be really really going up a lot before going back down. And normally the market is doing 3 push down before doing some push up. So if I take a quick look at how many push down it did, look, 1 push down, 2 push down, and here is our 3rd push down. So now I'm expecting the market to go ahead and retest there, do a higher low, and then I'm expecting the market to go back up like this. So I'm not expecting all of our 3 sell limit to hit, but at least 2 of them are gonna hit, or maybe just the first one. But anyway, I mean, at least we're gonna have 1 entry. So this is why I'm gonna put 3 small lot on my friend account at those 3 level, and that's it. So now I'm gonna remove this arrow, and we're gonna move on to the Fibonacci level. Fibonacci level. Now I want to know if my sell limit are on point. So I'm gonna take the Fibonacci. For example, that the market is going down, I'm gonna start from the top through the bottom like this. So now I'm like, all right, the market might go back up, but look here I have the 50%, 31%, 61% over there. So I'm not expecting the market to go that high, right? So I'm probably gonna add a sell limit over there at 76,450 because I know that it will get there for sure, and another one at 50%. So what I'm gonna do, I'm gonna do smaller lot sizing because I want to make sure that it's gonna. I don't want to miss the trade, but I don't want to handle too much negative. So now I will just check from 38, for example, to there. It's 88 pips negative, right? 88 pip negative. What is it gonna be? 88 pip negative. For example, on my friend account. 88 pips from there is gonna be $88 plus $60. So $60 plus $80, $140. So I'm not even at 10%. And 61% is there. And look how it makes sense. The market on the Fibonacci if it gets at 61.8%. Normally the market instantly reverse normally, because it's a level where everybody is scared. So everybody close their, for example, on this, are gonna close their buy position and are gonna be betting in the opposite way. So everybody is closing their buy and are selling at this level because they're expecting the market to go back down at this level. That's at this exact level there. So what I'm gonna be doing there, I'm gonna put all those sell limit entries over there because I am able to handle the negative it could get me if it goes back up to there, because I'm not expecting the market to go back up because I have 61%, I have a trend line, I have a resistance zone, I have a lot of the confirmation or goal is to get more and more and more confirmation. So what am I gonna do? I'm still gonna leave in place the sell limit, but it probably won't hit. So when I will see the market break this trend line, I will sell anyway. And I will remove this one because it probably won't hit. So what am I gonna do? I'm gonna be exactly looking for all the confirmation I can get. Sorry guys. So I have a resistance zone first. So one confirmation. I have a 61.8 Fibonacci level, second confirmation. I have a trend line, third confirmation. I have a lower bottom, fourth confirmation that the market's gonna go down, right? If I go on the higher time frame, for example, the daily chart, the market is bearish as hell, right? Fifth confirmation. I have a bearish candlestick pattern, right? So this is pretty much it. Like the bearish candle is a lot longer than the bullish one, right? So this is why I'm going to be putting, I'm going to put sell limit at 38%, because when it's a huge downtrend, sometimes it doesn't reach higher than 38%. Otherwise, it's gonna bounce to 50%, and the maximum is probably gonna be 61.8%. So this is the way you actually use Fibonacci. But now, if you want to use Fibonacci on the higher time frame, because you want to know long term, where's the market going? So now we know our entry king, right? We know how to set our entry to be king on the longer time frame, right? So now I'm gonna start because the market is going up there, it's an uptrend over there. I'm gonna start my Fibonacci from the bottom through the top, right? So this whole uptrend, I'm gonna put it there. Now, I want to know where the market is actually going. So here I have the 38%. So sometime what I do, because I don't like to hold this like that, I will put a line over there. I put it light blue like this, and I click on show text, 38% fibs. I write down here 38% of fibs. And I will also put the 50%, because normally the market get through that 38 and 50% when it do retrace. So I'm gonna put that 50% also. So this is the two level I'm gonna be looking for. Right? This is on the daily chart. And now we are actually on the 23%. So I'm gonna put the 32%. 23%, right? Is there. I'm gonna write here 23% of the Fibonacci. Now I'm gonna remove my Fibonacci on the higher time frame, right? So now it's easy. Now let's go on the one hour candle, right? Oh, what do we see now? We see the market is bouncing up that that support, right? It's going up because it's a huge support, right? So what's up? What's happening with gold? Just, oh my gosh, huh? What's up with gold? Like on my chart, it's pretty fucked up there. The market crashed to 34. All right. Anyway, we're just gonna be keep going, and we're gonna check later for that, right? So we have the 23% over there. I'm expecting. Look, normally the market before breaking something goes back up, but it already went back up. You know what I mean? So it might also just crash. So now we're gonna be looking for that breakout. So for example, I see a breakout over there directly, and it doesn't hit any of our sell limit. You're gonna put when it will be lower. a sell limit over the 23, like over there, because we're always expecting the market to go ahead and retest, right? So the retest will be around that 23%, right? And then it's gonna crash back down. But for now, we're gonna be holding our sell limit. So this is why it's really easy, guys. Like the trading, when you see that the market is breaking a trend line, it's easy. Now it's gonna go back down. So we're gonna be chasing for 38 and 50%. But on this market, 50% will actually make a lot of sense, because look, 50% could end up on a trend line, on a 61%, on a 50%, sorry, right? So this is why, like, I will be trading this chart like this. And it's pretty simple because you do it on every chart. It's simple. And this is the most used tool, because like you can see, I have no indicator, because the indicator is actually a formula based on the past, right? And like you are able to get like a better entry that the indicator is going to give you, because for example over there, like the indicator will tell you that after like 3 green candle, normally, like for example, like Stosh RSC or something, it's gonna tell you that the market is overbought. So here you would have said, wow, I have a zone, plus I have a like Stosh RSC like overbought, so I'm gonna sell. But look, the market kept going on, going up. Sorry, you know what I mean? So you would have been in negative. Then it went back down, but it didn't go really back down before going back up. So you probably would have got scared and closed your position somewhere around there. So you would have made probably like 20 pips. But when you really have some technical confirmation, like I said, price action, double top, double bottom, head and shoulder, when you have broken trend line, when you have resistance, support, Fibonacci. Fibonacci is even stronger than support and resistance. So this is why, like, I'm not really using with a lot of support and resistance. I'm really playing with trend line, because trend line are really respected, and I'm playing a lot with Fibonacci, and I'm playing a lot with orders, and now I'm really playing a lot with the supply and demand zone, because this is actually the key, because you always like put 3 or 4 entry over there, and this is pretty much it. Really, it's a really simple way of trading the market. So this is pretty much it, guys. Like it been pretty quick, but really, like, this is the way I'm trading. It's same thing with like buy limit. It's just like when the market goes in the other way. For example, we're actually gonna do USD CAD, right? Look, USD CAD. So what am I gonna do with USD CAD? I'm gonna go on the weekly chart. All right. So here I have the weekly chart. I'm gonna be looking for a trend line. So this is the trend line I'm gonna be looking at, right? Right. So now I'm looking at this trend line like this. Now I know I have a resistance over there. Whoop. Red, because this is a resistance. I always put it the same way, right? So, all right. So this is what I see on the weekly chart. Pretty simple, isn't it? So now look, I see that the market went down a lot, right? And I can see a head and shoulder. I have the first shoulder, a top, second shoulder over there. So will the market break? Will the market go down or go back up? Well, it's the weekly chart, so we don't really know. We just know that there's a strong resistance over there, and we could even do a zone. Even if it's a weekly chart, you can even do a zone there. Look, my zone will pretty much be like this, because every time that the market got in there, it reversed, right? Look, it went that, boom, crash. And my lower resistance will be there, right? And I can see that there's a resistance around this level also. But now I'm going to go on the daily level, because I want to make a clearer idea of where the market is going. So like what I like to start from higher time frame to go to lower time frame is that I'm actually able to fix my resistance and my support. Look at there. This is exactly where my resistance and support is. Look, this is a strong zone over there. Look, went there, boom, crash. So now on a smaller time frame, we can see a zone, right? From there to pretty much there. No, I will put it lower, like pretty much like there. Now I will explain you why I'm doing it like this, right? So this is the way I'm doing my supply and demand zone. Because look, it went, touch it, boom, reverse. Went through it, touch the resistance, shoot back up. So there, this is not fully effective. But over there, back again, touch this level, boom, rock. Try to come back in there, rock back up. Always, every time I did touch it, rock back up. So this is pretty much my my zone right there. My strong zone is over there. So what I'm doing now, I would have get for example, I go in lower time, for example, 1 hour time frame there, right? I would have put my first sell limit there. I think now I'm just gonna fix my zone with my lower time frame, like this. I have a zone, I touch a zone over there. Like this one, touch it, touch it, touch it. Yeah, I always go in the lower time frame to try to fix the zone to get like a better entry of this zone, like that. So this is pretty much it. Now let's look in the past if it's still accurate. I could even put it lower like this. So now I have a better zone, right? Because I can see that when the market goes there, look, there, bounce up, goes in it, back in it, boom, shoot back up. Now I'm just gonna go in forward chart because like I want to get the smallest zone possible, right? Because the smaller the zone is, the better the zone is, because the more accurate is the zone actually. So now, like that, like this. This is pretty much my zone there. So the way I will be working, I would have got a buy limit over there, another buy limit half of it, and a buy limit near the low of it. So does it make sense? Does it make sense? Yeah, it do make sense, right? So now I want to know, I want to put the Fibonacci, right? Because I see a huge downtrend, but the market never really retraced, and the market always needs to retrace before going back up. So what am I gonna do? Am I gonna go like that, over there? And now I want to know where short term the market is going. The market is probably going now at 23%, right? Then I'm expecting the market to do a double like kind of bottom, and I'm expecting the market to go touch the lower trend line at 127 over there, because like this is my expectation. But I already have like one sell limit over there, and I would have another one half of it. So let's see where I will put all my sell limit. I will have another one over there, 27,300. It's a buy limit this time though. Buy limit, right? I would have another one at the top of the zone. So from 128, I must be able to handle till 150 pips low, right? So I would have those three sell limit, buy limit, because I wouldn't have the third one. Why? Because it's under the zone. So I'm not really, if like the market goes there, it's not a good sign. You know what I mean? So I wouldn't put the third one on this one. I will wait to see what the market is going, what the market is doing. Sorry. So then I know that the market is gonna go through, like from there, it's gonna go through 23% at least. But then I'm expecting the market to go through 38%, because normally the market goes at this 38%, right? Because the market normally always goes through that level. So I know I will be probably closing my buy at 38%, right? Because what's going to happen is that the market might, for example, do that. Look, that. Then it's going to form a double bottom over there. And then the market's going to shoot up. Like this. Right? So then we're going to have our double bottom over there. We're going to still have our buy limit. But like we won't really be a lot of negative, right? We're going to be what? 50 pips a negative around that? Yeah, it's 70 pips a negative. So if you play the right way, I mean, you're safe. You're okay, right? And I'm gonna have my second set limit around there. So this is why I'm gonna be looking closely at my chart to be sure that I get the perfect entry, right? So this is pretty much it, guys. This is really simple. And to know where actually when to buy, like for example, a longer time frame. We're going to be chasing for a buy when the market will break this. I'm going to put it yellow. I'm going to explain you why. Yellow. So now I'm going to remove all the arrows. All the arrows. Right? All. All right, so like this, right? So why am I gonna be looking to buy when the market will break this level and not before that, except if I get like my beautiful buy limit there? Because look, every time that the market did touch this level, it crashed, right? So is the market gonna crash again when it's gonna reach it? We don't know. If the market does not crash when it reaches it, you mean that it's gonna keep going up, right? And we are able to do a second trend line, look, like that. Look. For example, like that. Now, wow, what did happen there? What actually happened on this chart? The market kept going boom, touch, crash, touch, whoop, break it. So now we know that the market is going up. Where? How high is the market going up? So this is how we're going to know that. We're going to go there, put the Fibonacci from the top through the bottom because this is where the market is going. So now it's pretty too late to buy, right? Because the market is already going up. Like you don't want to buy if the market is going up. You want to sell if the market is going up. So now 38% is there. We have 50% there and 61.8% there. So we could put, I get sell limit at 38%, 50%, and 61.8%. So we could put 3 sell limit around there, right? And if the market break the level over there, we're gonna need to close it. So we would have our stop loss there. No. Stop loss. All right. So how many pips can we earn from that? 225 pips around that because it's going to go back down and retest, right? Because it has to retest. So 200 pips low versus 100 pips high. It's 241. It's good. You know what I mean? It's worth it. You know what I mean? Plus, I will probably put a last sell limit around like 70% at 1.3600 or something like that. But me, what I prefer to do on that, I prefer to wait for the perfect buy entry than risking to sell because it might just go back up also. You know what I mean? But because like if I do a trend line like this, the market probably maybe gonna soon break down, like break back down. You know what I mean? Because if we take a quick look there, we have a trend line, bounce there, touch it, bounce, and then boom, it broke it. And then it went there. So this is why I'm saying I'm really expecting the market to go back down. So now the market is saying I'm going up because it's trying to trap you up. But trust me, it's not over yet. It's not over yet. Because like, look why it's not over yet. Here we have what? We have a double top there. Second top is higher than the first one. we have a trend line that got broken, but it's not a major trend line. It's just, you know, it's a good trend line, but it's not a major one. So I'm gonna wait to get this trend line broken. So I'm gonna put it another color, like I don't know, light blue, for example. Because if I go on a forward chart, it's gonna tell me when it's gonna break this trend line. It's gonna show me that it's really going up. So I'm waiting, because like I said, it's always like we don't have any double bottom yet. You know what I mean? We don't have any double bottom. Like look over there, for example. It went down, right? But look, then it went back up. So people were like, shit, I missed the beautiful buy opportunities. But look, boom, double bottom, and then it went up like crazy. Then it went really up. So what? So why I'm telling you that, guys, is that we don't have nothing now. We have a broken trend line, yeah. So it's gonna go up a bit. So for the scalper, it's nice, but it's already too late, you know. So, but for if you want to earn more pips and don't enter like into risky trade, you don't want to get into that trade. You want to put a buy limit over there, another buy limit over there, and you're going to be chasing. If it breakdowns, I'm really not expecting the market to break down. Why? Because if we are logic, right? Look, if we are logic, we have a first bottom over there. Like this is the longer time frame, right? But look, the market never went and retest that level. So I'm expecting a double top, a double bottom, sorry, there. And then I'm expecting a skyrocket. You know what I mean? So this is why I'm telling you guys, it's all logical. It's all, how can you find the right pattern? So I'm even expecting the market to go at 135, at 50% before keep crashing. So this is why I'm telling you, when the market's gonna break that trend line, like if we have an entry over there, I mean, we have a king entry, you know what I mean? And if the market break, wait for the retest and then buy. So this is it. This is simple as it looks like. Double top, double bottom are really the easiest chart you can actually be looking for. And sorry, I'm entering a message. So simple as that. Fibonacci, double bottom, double top, and supply and demand zone, some trend line. So this is really simple. So this is it, guys. If you have any question, well, just inbox me, and I will be answering. I hope you did a good thing. I hope you had fun. I hope you learned. And like I said, my class, like now, you know the basic. You know how to trade. But my class, it's more than that. It's really how to build confidence, because me, like I'm doing that, right? But before, it was not really working good because I wasn't doing it properly first, and second, I wasn't as confident as I am now. So this is all my class is all about. I'm teaching you guys how to be confident. I'm there for you guys because when you have questions, I'm there to build your confidence, because you send me your chart. I'm like, yeah, this is good. Yeah, you did a good job. No, you should do it this way. No, you should do it that way. I'm there. I'm doing webinars five times a week for my students, at least 3. I have some live trading session. I'm building beasts, guys. Like my goal is to build beasts. Why? Because a lot of people have been asking me, Pierre, why is your class so cheap? Yeah, Pierre, why are you giving up free signal? Why I wouldn't do it? Why I wouldn't? What does it cost me to give you? You know what I mean? And guys, remember something. The more you give, the more you get back. And trust me, I never got so much back in my whole entire life than now what I'm getting. And I'm giving up free stuff every day, every week. I'm giving up my time for this. I'm giving up for my student. I'm giving, and it's all coming back to me. You know what I mean? And this is what I want to teach you guys. Now you know how to do some beautiful trend line and stuff, but that's not enough. Trust me, that's not enough. Like joining my class, it's not paying $100. It's investing $100. Look, I'm building up account for my student. I'm building up account for my friend, and it's working. Believe it or not, it's working. You know what I mean? And I'm not there to tell you, yeah, join my class and you're gonna get rich. No, join my class because you're actually gonna get some confidence. You're actually gonna believe in your trade. You're gonna everything in general. Like even if you have project in real life, like it's gonna be useful for everything. And this is what, guys, I want you to understand. I want you to understand how to be confident. I want you to understand, guys, that trading is, yeah, 10% technical, but 90% psychological. Why do you close your trading negative? How to handle the negative. And this is everything that I cannot show you now tonight, because it's not an overnight thing. It's a long-term process, and this is why all my students first came in my class and thought that they were going to change like from day to day to by like poor to rich. But no, they understood, and now they are like earning money because they understood that like they cannot be rich overnight, but if they are able to make money every day, they're gonna get there. You know what I mean? Because you don't need to take some stupid risk. You know what I mean? And this is what, guys, I want you to actually understand. So if you're really looking to move forward, if you're really looking for like another level of trading, I'm pretty sure that I'm your mentor. Like, I'm the one that can help you out with it. You know what I mean? Because it worked for me. My mentor was book, failure, mistake. It was like, like that, because like, I just like, even if everybody was telling me stop, I said fuck you guys, and now I'm making it happen. I'm doing it happen. You know what I mean? I'm making money now, but I used to lose a lot of money in that fucking market. But every dollar that you lose in this market, you acquire as a knowledge. So don't, like, trust me, guys. Trust me, guys. The dollar you lost is nothing beside the knowledge you acquired. Trust me. So this is why I'm telling you, guys. You already did a good step by going in the Forex market because you want to change your life. You want to invest your money. But I'm pretty sure that your next investment could be my class, so I can help you out figuring out why it's not working. How can I get to the next level? And I'm that guy, and I'm that fucking mentor that's gonna, push you to that other level, that's gonna bring you that mindset that you need to focus. You know what I mean? It's a $100 payment. It's a one-time payment. I mean, like, there's no monthly fee, nothing. Like, normally people charge like $400-800 for private class. So don't think I need your money. By paying that small fees, you're just telling me, Pierre, I'm all in. I'm ready. We go all in. I want to change my freaking trading way. Like the way I'm trading. So this is just what you're telling me. So like some people say, yeah, but like I don't really want to invest $100. Then you're saying, Pierre, I don't think that your mindset and your knowledge worth $100. So if you don't think it's worth $100, sorry, but I don't think you're worth my not like my time, actually. Yeah, my time. But I want you to know, guys, that I'm ready to work with you. And like, trading is more than trading for me. It's a passion, and I'm pretty sure that you can see it, you can feel it. And the way I understood that is that I wake up every morning and I'm freaking happy to be trading. Like, it's not, I need to trade. No, I wake up in the middle of the night, I trade, I do my chart, I talk with you guys, and I will keep doing what I'm doing because I like to make you acquire knowledge for a really cheap price and even for free. You know what I mean? So make sure, guys, to leave a comment on Facebook about my webinar. It will be really awesome. I will really appreciate that. And this is it. This is it. So take care. I hope you liked it, and see you maybe in my class. Peace.